Welcome to the Embedded Finance Review podcast. My name is Lars Markull. Today I'm speaking with Sarina Deuble, who is an associate partner at McKinsey. She works with banks and fintech players across Europe and Asia, and her special focus includes embedded finance and banking as a service. I'm speaking with Sarina about the potential for banks within embedded finance and if every bank actually needs an embedded finance strategy. We also cover the role of big tech and how different partnership models work. Let's dive in. Hi, Sarina. Welcome to the podcast. How are you doing today, and in what part of the world are you located at the moment?
Many thanks for having me. It's really a pleasure to be today with you. I'm doing actually fantastic. Thanks for asking. Today I'm in Frankfurt, which is actually a little bit rare for me because my work often brings me to different countries. So it's nice to be home also for a change now.
Great. And today, obviously, we're going to talk a lot about embedded finance. And in the introduction, I spoke already about your background with McKinsey, that you focus on topics around embedded finance and banking as a service. So quite obviously, you spend a lot of time around these things. So maybe to kick things off, what's your personal excitement about embedded finance? What do you think is really interesting that is like worthwhile spending so much time on it?
Yeah, that's actually really a great question. So my fascination about finance goes actually way back, as long as I can more or less remember. Not just actually to my first days at the bank, where I spent almost 15 years ago. Mm-hmm. And what really excites me about embedded finance is literally the way how it reshapes how we live. So when I first saw fintechs building those early concepts, which is almost 10 years ago, so those mock-ups, so these business ideas, something also clicked with me. Because it was literally just a new way of banking, right? It was a new way of living, and it was like, how do we make payments not a separate, painful task, but how can we literally really seamless embed this as part of experience? So I guess sometimes you need a bit of a buzzword like embedded finance to capture this movement that we have experienced in the last years. And that's what happened. So the revolution was there, and we just have now given it a name.
Interesting. And I think what you described with the changes in banking landscape, maybe from our own perspective, seeing how banks have shaped in the last decade or two, starting with the branches, then coming online, then having a website, then mobile, and now basically another, basically you could argue perhaps that embedded finance is just another channel, so to say. Would you agree with that? Or what's so different about this new channel, embedded finance, versus maybe like the old ones, maybe specifically from a bank perspective?
That's actually a really great question. And maybe to answer this question, let's go a bit back in history, how everything evolved. Because the journey of embedded finance is a journey of evolution of distribution channels, like you mentioned it, from the more basic financial tools, which have been hidden into services, to the sophisticated integration that we see today. And actually the phenomenon around embedded finance, so embedding financial services into existing customer value chains, actually goes back more than 25 years ago, right? When we have seen the peak of innovation back then, which were co-branded credit cards. So banks were partnering with retailers, but what they have done is simply just putting logos on the retailers or on the retailer on their card and offered credit lines. Back then, it felt quite revolutionary, but compared to today, it's a bit like the financial equivalent of a dial-up modem, so to say. And yeah, fast forward, if we now then look 10 years back, more a decade ago, you've got the rise of neobanks like Revolut and Monzo, and they were just more agile, more responsive. They have also leveraged more the new licensing frameworks that have been set up. And they proved that customers wanted to something which is more slick, or more faster, more intuitive. And this was already a kind of new way how to interact, how to engage with customer in a way that it was disruption of distribution channels. But then I guess it's fair to say that the real kicker came only just 5 years ago. Also with the pushes of customer convenience that came with COVID, and embedded finance players also started to roll out more powerful API platforms. So they truly have given the companies the ability to add banking services now into existing value chains without becoming banks themselves. And this is the true innovation and disruption. And this overall didn't just make things only easier. It literally also opened up doors for businesses to innovate faster. And now in the recent year, what we've also seen is that even cloud technology, in addition with the open banking regulation, truly has helped to bring in new players into the ecosystem. So trust and non-banking players have pushed further. And just to mention an example, almost half of the US people are already using Apple Pay, right? Which is a payment scheme coming from a tech player, and who have literally thought that also a tech giant would become a financial powerhouse.
It's quite interesting how you described it, that like embedded finance in a way, if I paraphrase you, has been around for quite many years, maybe for a couple of decades, but specifically the last 5 years, we have seen an insane push. And I guess even the words embedded finance, I think we're really probably picking up around that time. And I guess from my perspective, like adding to what you shared, is obviously something else happened around that time with like COVID, where I think a lot of these challenges the challenges for customers became more evident. And obviously non-financial brands, very often technology companies, are very much in the mindset of like solving the customer's problem. And obviously they realized that banks are not willing, not able maybe to address those needs that quickly. So there was a good opportunity for them to jump in. And that basically helped a lot to accelerate the speed in a way. But if we're now like taking a little bit of a look into the future, how do you see that evolving the next couple of years?
So I guess it's fair here also to bring a few facts, although I do not want to be too much fact-driven, but I guess to describe the future and also the momentum embedded finance will bring, some KPIs stand out and should be definitely mentioned. Looking at the future, in the next 5 to 6 years, so by 2030, we actually expect that embedded finance in Europe will capture around a 170 billion revenue pool, of which the providers of embedded finance, which are literally the fintechs, the licensed players, or the banks, will take up a share of around 100 billion. So this few number already demonstrates that there is some massive revenue pools that will be distributed and which will also be captured in that space. And when we now break this down a bit into different use cases where literally the embedded finance value pools lie. So typically we can distinguish between 3 types of end customer. The one are the retail end customer, the second one are the SMEs, and then thirdly you also have the large corporates. And looking into this market, retail end customers as of today are definitely already the biggest user group of embedded finance channel. And they will also make up the largest part in future of around 60%. Then this is followed by SMEs. Around 30% of the market will be then also allocated to SMEs. And then finally, the remaining part you have on large corporate. What are here now the most relevant products and how it will evolve? So we do see especially lending will dominate the product landscape, which will, of the revenue size I've shared earlier, almost capture half of the market, followed by account deposits and then payments. And overarchingly, in terms of relevance of the distribution channel, embedded finance versus direct to customer channel, we do expect that actually up to 15% of the banking revenue pools in the next 5 to 6 years will be ultimately distributed by third-party channels, so by literally embedding financial services. And I guess this already indicates a quite significant opportunity for the distribution players to capture and to engage in this opportunity, but also means for banks that they need to reflect about how do I literally deal with this evolution in the market.
The thing you mentioned right now, which for me stands out, is obviously embedded finance is the typical combination or consist of the 5 financial products: payments, banking, lending, insurance, and investments. And obviously it depends a lot from what angle you look at these things, which kind of stands out, I guess, as you described it, from a especially revenue opportunity is lending, of course, I think one extreme one, or like a very promising one. I guess also the other ones, right? Like even like a banking one, where even maybe a banking is not the one where non-financial brands or infrastructure provider can perhaps make a lot of revenue compared to lending products, but still provides its own benefits of increasing touching points and by basically smoothing into other financial products as well.
Yeah, what you also see in the market, literally, it's not only where a non-licensed player, like an e-commerce player, a retailer, mobility platform, collaborates with a financial service provider in order to jointly provide financial services. What you even do see is, because of the technological advancement, that even a banking as a service provider could provide its services to financial institutions to help them to optimize their services. What you see in the market, we also have wealth as a service players, which I personally also find super exciting and interesting, because this entire topic around wealth shifts, how to invest for the future, is something I'm personally also super interested. It's something where also even licensed players truly benefit from partners who are deep in the system, to collaborate with them to provide here again the best user experience to the customers.
And since you mentioned, Sarina, and since you mentioned right now the opportunity for even some of the infrastructure providers, I think you mentioned banking as a service, to also work with banks. I guess if we put everything that into one picture, right? I mean, as we described it at the beginning, banking started with banks being the sole provider in the whole value chain, from creating the products, offering the products, marketing the products, doing everything around it. Over the years, we have seen different trends or the removing of entry barriers, maybe most importantly, to make it easier for new parties to come in. So now we have this whole like segmented value chain where different providers can do different things. Now, obviously, this is an embedded finance podcast, so I guess me, and it also applies to you, is like personally very excited about embedded finance, and non-financial brands have a unique opportunity. But now that you're also saying perhaps targeting banks, do you see maybe specific use cases or even products where maybe a bank is better positioned to provide the financial services compared to a non-financial brand? Or maybe also from a personal usage perspective, how would you say who is better positioned? What are the characteristics for that?
Yeah, so I guess in terms of the overall landscape, or how we would structure the market, is that typically you have three different players in the system as financial service providers. So the one are the banks that you have been just mentioning, which typically have a full-fledged banking license and could, from an embedded finance perspective, offer the whole range of products. So this is number one. Then what you also see in terms of banking as a service, embedded finance providers, typically the EMI licensed institution, electronic money institution providers, who typically only provide a specific product here in the payment space. And what you also see, and this is rather a minor part, are the fully fledged BaaS fintechs in the system, like a Solaris, who do have a banking license and who could also provide the full-fledged. So this is, first of all, a bit the landscape of player archetypes that we do see. In terms of trends and also who will dominate the market, so what we can observe in the market is definitely a trend toward a broader range of product offerings from an embedded finance perspective. Also, with increased regulatory scrutiny, we do see also that players who do not have yet a full-fledged banking license also moving into that direction, resulting in a greater harmonization among the players, which also means, right, that competition is getting higher, will also be an increased margin pressure. In terms of overarching relevance, the banks as of today, right, are the biggest provider group of embedded finance solution. And as of today, payments is the one which is, in terms of use cases, already something which is quite prominently positioned in the market. Many of the banks are providing or are partners for co-branding credit card. And we also do see literally that in future, banks will be the majority of the part of the financial provider landscape. However, what I also do see is, and also expect, that innovation or innovative players like the fintech will still be a part of the game. And this is also actually required, and I also guess environment and the system needs to foster further innovation in that system, just also to remain innovative. So in short, the banks are the biggest part, will remain the biggest part, and then it's a combination of specialized one and the fintech. And I guess the second part of your question was also a bit around what should the financial partner provide versus what should ultimately the retailer provide. or the distribution partner. What we see in the market are literally more or less 3 different type of partnerships that you have in the market. So one is where the retailer just have loose tactical partnerships with a financial service provider. The more intense one, if you then enter more a strategic partnership with a provider, and then you even see in the market, though a bit more rarely, that even some of the distribution partners, especially retailers, e-commerce players, also own financial service institutions. What are here now a bit the considerations? So going after loose a tactical partnership gives you much more flexibility, also increases competition between your provider. So typically when you do this, you have for payment different provider, you have for buy now pay later solution different provider. On the other hand, this also has some advantages because you lack deep integration, and also as a retailer, you have to deal with a lot of complexity, especially if you are active in different countries, as these partnerships are often quite country focused. So there is also kind of a trend, what we see into more strategic partnerships, right? Where companies align their goals, co-create solution, often leading to truly innovative offering. So we are seeing evolution from a partner to the owner, what I've also mentioned, but especially those strategic partnerships help you in order to come up with joint solution, come up with better risk assessment, provide advantages for all stakeholders in the system, for the end customer who get more convenient solution, for the bank who can run better risk models, and ultimately also for the retailer who can increase or decrease its cost base.
And do you see also like non-financial brands or these industry niche players that they are kind of going through a certain, let's call it like a learning cycle? I mean, as you described it, probably if somebody wants to get started, there's something which you can start much easier. And then probably when you do your first learnings, you involve in something else. And maybe that's the first part of the question. And then the second part, will this, from your perspective, in maybe not in every case, but in many cases also lead to this financial brand at one point becoming regulated, meaning applying for a license and owning the stack like more by themselves?
Yeah, very interesting question. And definitely I do see a lot of learning evolution in the market. But I guess this is true for all the new innovations that come into an ecosystem like we have been observing, especially the players. Or if we look into the market, you see some retailers who have started with loose tactical partnerships, who went to strategic, then became a bank, and now also shifted back. So there's a lot of disruption and movement in the market, but this is also absolutely the right one in order to further enhance and learn the offering. I guess what also in the previous podcast that you have conducted, also with Metro Financial Services, I guess this was a quite interesting one because also getting here the reflection, typically, what's the right approach? To start with something very specific, with a concrete nucleus that is solving a concrete customer problem, a pain point. And then based on that, building the nucleus further with regards to enhancement of the product offering, enhancement of the geography where I want to be part of, or even enhancement also of the different customer segments that I go. So this kind of stage process, regularly reflecting about what are the things I can do even better? What are the challenges? Making the continuous improvement better is something which turns out to be quite successful.
And also maybe to add from that, from my perspective as well, or specifically like in my experience with working a couple of different companies, as you both mentioned, starting with something small, addressing some very specific needs. One of the major advantages I see in real life is that this gives a lot more conviction and validation for the people driving these things, maybe more in Germany than maybe perhaps in Asia. But of course, there is a kind of like hesitation sometimes to offer financial products. And maybe even a person who doesn't know much about building financial products, but knowing how to use them is a little bit like overwhelmed about the possibility to do that yourself, basically. But obviously, if you can start with something very specific and start maybe, or of course, ideally with something that provides immense value for the customer, and then seeing then the benefit of it and get conviction that this is something that your customers want to use from you, because that's a very big question for many non-financial brands as well. Yes, my customers want to use financial products, but am I the right brand? Is Metro Financial Services the right brand to provide financial services? That's only what you can find out if you test these products right. And I guess these partnerships are good examples to achieve that.
Yeah, and you've mentioning already a really interesting point, right? The most important thing also from a financial brands or an industry vertical in order to engage with embedded finance is really also to think about what is my aspiration level? What do I want to achieve? Do I look for deepening customer relationships? Do I want to drive new revenue? Do I have a concrete customer pain point that I want to solve? So key is really identifying a moment in the customer journey where you as a non-financial brand could also create a value add that the customer did not even expect it. And then it also really depends on, do you have some kind of a first financial offering already in place? For example, some kind of embedded payment solution or buy now, pay later, or are you literally starting from scratch? And if you start from scratch, right? So then it's really about, what do I want to achieve? What is here where I want to go? Do I want to build up something which truly enhances my customer engagement, my loyalty, my basket size? So having here first perspective about the strategy. And if you already have something in place, then it's truly reflecting about, how can I elevate my customer journey? How can I make it more frictionless? Would it help to, for example, include additional embedded insurance solution, because that helps him to solve a specific problem? And crucial is here truly also to leverage the use of data, because this ultimately really brings the value add to understand customer better, to do better marketing, better tailoring, to optimize the cost base from a retailer perspective, but also to optimize literally then the pricing towards the customer.
And I think you said the absolutely right thing with having the right foundation for being able to collect and understand data is so extremely crucial. I think we touched on that podcast also with Michael in the Metro podcast that you referred to already, but also generally seeing it among other brands where you have multiple different ways of generating revenue with financial services, and some of them are really easy to measure. Like if you give a loan, it's very easy to measure how much interest rate you can potentially earn with it, and maybe the same is applicable to payment and banking as well in the direct products. But then what you see in many companies is, say, and Shopify is perhaps a good example as the lighthouse in embedded finance, how you can basically create a so-called like flywheel within your company where you can just increase the usage of the main product through financial services. But obviously then coming back to the data point, if you don't know this relationship and what is impacting what, then obviously you might be offering financial services but not being able to get all the benefits out of it.
Absolutely. And this is the crucial one, right? Because we have the two concepts and the two innovative themes with embedded finance on the one hand side and then the data evolution on the other hand side. And finding the sweet spot in the middle is literally the crucial one, but also the one which gives you the most value add. There are so many retailers out there who are also offering and setting up loyalty schemes, but that only helps you if you truly monetize it with proper data. And now linking it to financial services, it helps you not only to interact in your own ecosystem, in your own world, but literally also create something more broader around it. Because financial services is something which you use on a daily basis. So you do have the opportunity by using your card, also knowing more about the customer, not only in your own brand world, but also to find out, where does he go? Where does he spend time? With whom is he or she interacting? What is the average amount of money he or she spends? In which country cities is he traveling to? And this combination is the one which truly gives you a value add for monetization.
Agreed. And Sarina, obviously, both of us, as mentioned before, are very passionate about the topic. And I guess for people out there who are also passionate about the topic, a lot of the things are quite clear and evidently, but obviously we're also not naive, right? And there are a lot of challenges and issues around embedded finance. And maybe let's look at a couple of them as well. And in one of the previous answers, you already mentioned Apple Pay. So a common point referred by non-financial brands that they should not offer financial services, that they believe or they have the expectation that big tech, maybe Apple, maybe Amazon, maybe Google, Microsoft, and similar tech companies will be the ones ruling these offerings sooner or later.
Yeah.
What's perhaps like your view on that? Do you agree with that, or are there still some opportunities also for perhaps like smaller brands?
Yeah. So the big techs are literally the big giants, right? And they are all realizing currently the value about embedded finance. Apple Pay, we've discussed, but also if you look at Airbnb, they make more than 10% of the revenues already from financial services. So they all truly identify what is the money I can make with financial service, but also the power I have in terms of personalization and customer engagement, because these are typically the two things that you want to get out of a relationship with a customer to continuously create value. And these companies do have the data. Just thinking about what we all spend time with our mobile phone, what kind of information the players already have, if it is Amazon, Google, Apple, whoever. And they have been able now to create this trust to step into a position of a financial service provider. And I actually do think that they will definitely remain to be one of the key players, also further push our thinking here, be a really relevant part in this game. But I guess this is also a bit about the beauty of this trend, to have the competition, because that keeps everyone on their toes.
And I guess also, again, embedded finance is such a broad field, right? And obviously there are a lot of different potential use cases. And I guess, again, big tech are massive corporations, and they might be the good ones to go for standard solutions like Apple Pay, which can literally be used by anybody and everybody around the globe. But perhaps if it's more niche focused solutions, if it's a vertical SaaS provider for a specific clientele in a specific country, might not be something where these providers can come in. In the second, say, concern or let's say a negative point, I mean, obviously we spoke about the development of embedded finance in the last years, decades, and took a little bit of a look in the future as well, is that if you kind of narrow in on what has happened, let's say in the last 2 or 3 years, not everything has been rosy and shiny, quite obviously, right? We have seen multiple non-financial brands with product launches and some nice developments, but we have also seen is a significant drop in funding for technology companies, which also resulted perhaps in a lesser adoption of these financial products than maybe what we assumed before. But also we have seen the same time challenges around some of the embedded finance partnership models, specifically compliance, license issues from different providers. So not everything is rosy and shiny. Like when you look at these things, how do you put them in the perspective and the bigger picture of what has happened?
Yeah, you're absolutely right. So it's not all glitter, it's not all gold, it's not all shiny and rosy. And so fully agree on that. So what we've seen is, and you've mentioned already the drop in funding. In 2023, it was almost 70% in terms of funding drop for financial service BaaS fintechs that we have observed in the market. And of course, in 2023, the market was anyway struggling because of the high or the rising interest rate, which had more or less a cooling effect across the entire investment landscape. Nevertheless, also just following recent press reports about banking as a service fintech, the challenge is definitely around building up a sustainable business model. So a business model that can generate real revenue, profitability, and growth. Because ultimately, from a financial service perspective, you do have to share revenues. What I've mentioned earlier on the market size, how it is built up, the banking revenue pool is something which is sad. But as a provider, when you collaborate with distribution partners, right, the distribution partners will also get its fair share around it. So this is the tricky part to get right. And what are now the considerations, or what should be the recipe for success, I would say? I guess 4 things are most relevant. So the one is really that you be able to scale quickly. I've mentioned earlier the kind of nucleus approach. So to come up with a scalable business delivery model in order to push products out into the market quite quickly. Number 1. Number 2 is the smart decision on the partners from a B2B perspective. So what is the right partnership structure. Do I collaborate more with fintechs? Do I collaborate more with industry vertical? Because typically what we see in the market is that industry vertical have a much, much longer conversion cycle, up to 18 months, where you can already, when you provide embedded finance services towards fintech, can also do it within 6 months. So it's also the smart structure of your partnership, of the partnership landscape, but also having the proper B2B partnership go-to-market capabilities in order to win them. And then thirdly, it's around having strong data and analytics muscle and providing that to your partner. We've already elaborated on that. Data is everything, getting the true money out of it to enhance customer value. So this is a third point that you should get right at the very beginning. And then fourthly, it's also a balance of resources. Talent is scarce, money is tight. So finding here again the sweet spot, this is typically what is something you as a BaaS provider need to make right, and where we also have seen some challenges, especially in the last months and years.
And since you mentioned BaaS, banking service provider, right now, from your perspective, are they still interesting for investors to invest in? Because obviously we have seen many models, maybe not failing so much, but of course having very big challenges and a lot of like changes in strategy and perhaps even pivots. Do you think they're still an interesting investment target, or has that changed quite a bit?
Given when you see the growth in the market and how embedded finance in combination with the data will further evolve, it's definitely an investment theme. It's, I guess, less the what, it's rather the how to make the business model quite successful. So coming back to previously what I've mentioned, truly demonstrating that it's a sustainable business model, having the capabilities in order to build up in a way that you can still demonstrate a hockey stick and be capable to also become profitable within a certain period of time.
Understood. And now for the last part of the interview, for the podcast, let's come back a little bit to the role of banks in embedded finance, because that's obviously where you spend quite a bit of time as well. And I think there's still a lot of opportunity for banks in the field. So maybe to kick things off, from your perspective, or like from my perspective, maybe first, when I look at banks in the embedded finance, there are a different place a bank could be doing. Obviously, again, the concept of embedded finance is combining something financial with something non-financial. So maybe a logical one for banks would be as well to enter stronger into the offering of non-financial offerings and combine it with existing financial products. Or maybe another strategy or another play would be to enter the as a service segment, or in a way enable other brands to offer financial product. Maybe first question, do you think every bank today should have an embedded finance strategy? And then secondly, how can that look like for different banks?
Very interesting question. So I do not think that every bank needs a concrete embedded finance strategy, but every bank should think about it, how to respond to the market movements that we see. What we still see is, right, the majority of the market will be distributed by D2C channel. Although there we also see a massive shift away from branches, more into mobile, but it's a bit of a separate topic. But that's number one. Embedded finance will be a relevant one, but it's around a 15 to 20% impact. So there's also a massive other space where banks need to think about how to best solve for the D2C relationship. So what I do think actually in terms of market models, and which could be quite interesting. So you have banks like, for example, a Starling Bank, who have built up a D2C proposition and then literally identified that offering that we have. This is quite unique, stellar, a really good UX. Why not making an as a service proposition out of it? So creating a complete new business model around the engine system. This is a kind of evolution I also talked about earlier. If you have a really stellar product, could there be another business model where you offer an as-a-service solution to other financial institutions or industry player? And if you as a bank think about how should you position in the market, literally you have the spectrum of 3 different plays you can do. The one, as just mentioned, creating a new business model out of it, especially when you also are thinking about, can I unlock a complete new customer segment with that I previously didn't have? For example, if you are pure a D2 retail player, is there something around which I can build up a proposition also to unlock an SME proposition? In the middle one, you have more, if you have a quite good product, to further double down on it, to bring it to more partners, to literally enhance your partnership base and use it as a true distribution engine. Or the third one is if you say, hey, well, look, embedded finance is an interesting one. I do not want to go very deep into this market. Nevertheless, what I do then need to do is also to find strategies how to respond to the threats that are in the market, because ultimately you also have relationship probably with the large corporates who then enter into partnership with other financial institutions who provide embedded finance services for you. So this is a bit the spectrum that I see in the market.
And maybe elaborating on the different opportunities and areas that you mentioned right now. When, from your perspective, maybe let's perhaps, because the market is quite different around the globe, maybe narrow down on Europe. Do you see more banks looking at embedded finance or engaging with topics around embedded finance to protect themselves, basically in a way to protect themselves for potential threats of losing customers? Or are banks more looking at embedded finance as an opportunity? Because from my perspective, with my personal engagement as well, and you obviously also spend a bit of time in Asia as well, very often when I engage with financial institutions, for me specifically in India, but also in the rest of Asia, I have the feeling very often that those banks, when they look at these things, they see it as an opportunity. I think it's very much driven by the fact that the demographic, the market is changing quite a bit, and there's a lot more new customers becoming available because of people are being able to consume financial products, which they've not been able to do before. So there's a lot more appetite for new business. Whereas when I look in Europe, I tend to rather see like they're looking at embedded finance because they're afraid that the existing customers go away and they rather want to defend that. What's your views on that?
You're right. And I've been also working quite a lot in Asia and Singapore, in the Middle East, and also in Europe. And if I compare these three different regions, there's definitely more interest and power to disrupt the market and more the Asian and Middle Eastern market. Nevertheless, what we do have here in Europe is already quite stable use cases, matured use cases that we have in the market. So the question, the banks or the conversations that we have with the banks are often around what could be the opportunity, how to best position, but also what you have been mentioned, what are the threats, right? How do I need to best act? And it's a bit of a mixed picture. There are definitely some incumbents who think about innovative proposition, new models that go into the Klarna direction. But most of them are still a bit more hesitant when it comes to truly thinking about what is the business model of the future in 2030 to compete in such an indirect embedded finance distribution landscape.
And probably to be fair, I mean, I've not put myself into the shoes of a person responsible at a bank in these kind of things, but there's a lot of things that are happening out there, right? So maybe there's Sarina and Lars who are saying it's embedded finance, there's the next person, it's AI, and 5 other things. And obviously all of them are right in one way or another, but what's the thing to focus on, right? But I guess at the end of it, it's a core responsibility of such a person to understand what's happening. Maybe there doesn't need to be an embedded finance strategy in place, as you mentioned, but it should still be in place to understand what the impacts could be and what is changing. So maybe not a strategy is necessary right now, but this could be different tomorrow, next year, 2 years, when maybe other things have changed in the meantime as well.
Exactly.
Awesome, Sarina. So much interesting insights. Thank you for joining. If there is somebody out there who wants to pick you up on maybe something specifically you said, or just wants to have a personal conversation with you around embedded finance, is there a way to reach out to you?
Absolutely. Just reach out, probably best via LinkedIn. Drop me a note. And it was a real pleasure actually to be part of your podcast. And I would love to encourage everyone really to take a moment to think about how can embedded finance from a distribution landscape literally enhance the customer experience, because sometimes it's easier than you might think, but also from a banking perspective, how can literally this type of revenue pool be unlocked and to position best in the market.
Amazing final statement. Thank you so much, Sarina, and until next time.
Thanks a lot, Lars.
Thanks for listening. For more episodes, our weekly newsletter, and more content, please visit embeddedfinancereview.com. Until next time.